So let us go into the individual topics, and please let me kick off by the first topic, highlights from the Sustainable Investment Survey results, as well as the challenges of retail investment. Now, we have limited amount of time today, so it will be very high level. But I'd like to first acknowledge that within Japan, but also globally, I think we are at a point where there's a lot of debate around the scope and definition around sustainable investment. For the purpose of the Sustainable Investment Survey that JSIF conducts on an annual basis, this is done in alignment with the GSIA definitions, which last year also looked at looking at the alignments with other associations such as CFA and PRI. So the definitions by which we have been collecting data for the investment survey is based upon those investment management methods, as you can see in the below chart. The overall message we saw from the numbers was that the absolute figure of total assets under management had increased. However, the proportion had very slightly decreased in 2024. Now, we acknowledge that due to the depreciation of the yen, as well as the appreciation of the dollar, as well as other market developments, these superseded the sort of minor trends we were seeing in terms of asset under management from a total sustainable investment trend. And therefore, we believe that it's been more of a stable trend rather than any increase or decrease from a sustainable investment perspective. In terms of methods used, there's been a strong tendency towards ESG integration and engagement, which has been a consistent message, with a bit more emphasis on engagement in the last year. Now, moving on to trends in the retail investing landscape. Now, in terms of investment trust funds and its asset under management trends so far, admittedly, it represents a total of less than 2% of the total asset under management in Japan. So you could say that it is still a small proportion. However, with the broader push towards encouraging retail investors to be engaged in investing, and debates around sustainable investment and how to get retail investors more interested, engaged, has been quite a hot topic for the last year. At JSIF, we thought it was a good opportunity in this white paper to address what are the key policy developments and what are the observations and potential challenges for retail investors. And we'd like to highlight two key points here. One is the March 2023 amendments to the Comprehensive Guidelines for Supervision of Financial Instruments Business Operators. And specifically, it's about the mentioning of ESG within the fund names, etc. Now, due to these partial amendments, after seeing the funds doubling between March 2019 and 2023, the pace has leveled off. Another point to note is in January 2024, new NISA tax exemption programs were put in place. On the one hand, this has been a positive for retail investors who have increased their scale in terms of tax exempted funds that they can invest in. However, the challenge for sustainable investment is there. One is qualifying sustainable funds available through these NISA products are still limited. The other is a historical legacy. In the past, there were high commission funds, making it a challenge for retail investors. And therefore, rewards were put in place for low commission funds as a solution to investor protection. This has led to a disproportionate investing into standard index linked funds, which poses a problem to sustainable investment. Bearing these challenges in mind, it is suggested that there is a need for greater disclosure on investment philosophy and stock selection rationale to encourage investors to look more detailed into the actual fund details.